G'day everyone, it's Engelo Rumora here. I'm your favorite Australian and the real estate dingo bringing you another vlog. And today the question is this: how do you know if you are investing in the wrong market? Let's get it started. So guys, I'm probably going to sound like a broken record here, but I swear that I've been saying this for the last 5 years now. And before I kind of get into my philosophy on the numbers in a particular transaction and how important that is to a market and where you're investing, I want to stress this. It is very, very, very important that you build trust and relationships with the key people that are going to be involved in your real estate ventures, okay? For example, you need to have a good real estate agent. You need to have a property management company. You need to have an accountant. You need to have an attorney. You need to have contractors. You need to have rehab crews. You need to have a title company. You need to have advisors, mentors. You need to be a part of a real estate club. You need to be a part of an online community. I mean, guys, your network equals your net worth. And the more people that you surround yourself with that are doing it day to day and succeeding in it, eventually they will pull you up with them and you too will be successful. And it's, guys, it's very, very important, right? And in order for you to get to where you need to be, it doesn't happen overnight. It's going to take 5, 10 or 15 years to build a lasting portfolio that will be able to offer you financial freedom. So anyone that's looking to do business with you quickly, a one night stand, a wham bam thank you ma'am, you should not even consider talking to those people because nothing happens overnight, guys. It all takes time. And you want to work with people that understand what delayed gratification means, that understand what planting the seed now and reaping the harvest later is. Building that relationship with you, building that trust, willing to hold your hand, willing to help you, because in return, by helping you get you to where you need to be, they'll be able to get to where they need to be. Okay, so that is very, very, very important, guys. Teamwork makes the dream work. Please, I'm begging you, don't forget it. There's my little broken record segment. Now let's get down into the nitty gritty. So the market, okay? How do you know if you're investing in the wrong market? Guys, it is very, very simple. You know, my experience has led me to believe that, I should forget about all of the online stats and demographics. As I mentioned to you, the team is by far the most important thing. So let's just hypothetically say that you have found the right team in a particular market that you've kind of been eyeing and researching and whatnot. Then you need to get down to the fundamentals. And this is what I mean by the fundamentals. Guys, cash is king and cash flow is queen, and you can forget about appreciation because that's a crystal ball analysis. We do not know what tomorrow brings, so you can't include any appreciation estimates into your calculations. Now, what I'm about to share with you guys is probably going to, a lot of you are probably going to say that I'm absolutely insane and that it just doesn't work in your market, which, look, I understand. And I attend a lot of conferences nationwide, and a lot of these institutional companies and buyers, they're all talking about a lack of inventory and a lack of cash flow in these other markets that have seen a big appreciation. Great, I get it. Well, then don't invest in that market. It's as simple as that. Find the market where the numbers make sense and just focus on the cash flow, guys. That is my belief. Once again, take it or leave it, but I do not believe in appreciation and I do not believe in speculation. I believe in the core fundamentals of a deal as it lies today. So, you listening? Let's get into this one now. This is what I think you should be doing, and these are the numbers that I think you should be getting in order for that market to make sense. And if you're not getting these numbers, then you are in the wrong market, period. Okay? If you are buying turnkey, or if you are buying through a real estate agent and you're buying a property that is renovated and you just need to put a tenant in there and you're going to hire a third-party property management company, or you're going to self-manage, whatever it may be, it is my belief that unless you are making 8% in net cash flow, that you should not do the deal and you should not invest in that market. So let me repeat that. 8% net return on investment. And I also want you to include a margin of safety where you are overestimating your expenses. So you're going to pump up your maintenance and vacancy deductions. So what are some of the deductions when you're calculating your ROI? You've got your hard costs like your property management fees, your insurance cost, and your property taxes. Then the unknown, the maintenance, the vacancy, and for all of you guys that like to include CAPEX, unless the property, has been recently renovated, then you can include those costs in there too. So guys, rule of thumb is this: overestimate your expenses and underestimate your income. Once you have done that, and the numbers on paper, as they lie today, will produce an 8% net return on investment, don't touch the deal, period. That is my honest belief. You've got inflation chewing out at you of 2 to 3% every single year, whatever the numbers are there. So you want to be making some kind of money, and you still want to minimize your risk as much as possible. Otherwise, you might as well just take your money and put it in an index fund, right? The S&P 500. So guys, that is my belief if you are wanting to be as hands-off as possible. 8% net, unless you're in a market where those numbers are, unless the market offers those numbers, forget about it. I wouldn't invest in that market, or I would get out of that market. Second, if you are like me, where you're happy to kind of get down and dirty and actually, do deals and hustle and negotiate hard and send out a lot of yellow letters and, not buy property on the MLS, get very creative with your acquisitions and try and keep rehabs to a minimum, and you're a volume type based investor like I am, this is my belief. Personally, I would not get out of bed. Okay, I would not get out of bed. I would stay sleeping till 10 unless I am making a 15% net return on investment. And now, if you don't trust those numbers, shoot me an email. I can show you numbers better than that all day long. Those are the numbers that I do. If I'm buying and holding for my portfolio, I can do those numbers all day long, even better. I encourage you, please reach out to me, and I'm happy to show you the numbers that I'm doing in my market. And look, once again, that's going to come down to finding a property, buying it cheap, guys. Don't forget this. You make money when you buy, not when you sell. That's where investors get it wrong. They think, it doesn't matter if I can buy it cheaper or negotiate hard. I like the property. I'm just going to buy it for whatever the asking price is. I mean, hello, guys. I mean, you want to buy it for as cheap as you possibly can because you make money when you buy, not when you sell. Rehab always goes over budget. Never forget that too. Okay. So I buy cheap and I negotiate well. Then I, rehab to a average standard. I don't want to overcapitalize on the rehab because I'm in a B-class market in a blue-collar working class area. I don't need granite countertops and porcelain toilet bowls. And then, of course, I've got a property management company where we manage. And I would not do the deal for my own portfolio unless I am making 15% net. So guys, a lot of people ask me, Angelo, you're an Aussie. You've been born and bred in Sydney, Australia. Beautiful beaches, beautiful country. It's just amazing over there, right? What the hell are you doing in Toledo? Aren't you freezing your balls off? And I'm like, guys, I'm here because the numbers just make sense. And I moved here because it was a once in a lifetime opportunity. I just don't know of any other market where I could find a better return on investment. So that's kind of pretty much it, guys. That's why I'm here. I'm doing it. Where you can find numbers similar to the ones I'm talking about right now is the Midwest, period. No ifs, ands, or buts about it. That's where the deals are. That's where the cash flow is. Forget about appreciation. Focus on the core fundamentals of that particular transaction as it lies today. So let me repeat those numbers again for you. 8% net if you want to be hands-off and you're either buying through a real estate agent or turnkey or whatever it may be, and 15% net if you want to be hands-on. And if you live in an expensive market where you can't find those numbers, well, hey, guess what? Move to a market where you can. I did it. It's a sacrifice that you have to make, but hey, nothing comes easy in life, guys. If you want financial freedom, you're going to have to make sacrifices. You're going to have to work hard for it. So, hey, hate it or love it. And I know a lot of you guys are going to hate it. So look, I welcome your criticism. I welcome your comments. Please feel free to comment below. I've got thick skin. I'm a big boy. I can take it. Am I right? Am I wrong? I'd love to hear from you. But guys, that's pretty much it. I'm Engelo Rumora. I'm your favorite Australian. I'm slightly controversial today, but hey, I'm looking forward to catching you in the next vlog. You guys have a great day.